Good morning. Welcome to Stock Market Today. It's Thursday, August 29th, 2019, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email so you can follow along with this show and get daily stock ideas for you to consider in your inbox every trading day before the market opens. So U.S. equities finished higher in Wednesday's trading, ending near the best levels of the day. Energy and discretionary led the charge, while utilities were the only group to finish lower on the day. Treasuries were stronger across the curve. The dollar was stronger against the yen and euro. Gold finished down 20 basis points. WTI crude settled up 1.5% following bullish inventory data. As we get to the desk this morning, futures are following through to the upside, adding nearly 1%. Asian markets were mixed overnight, and European markets are moving higher. Treasuries are weaker across the curve, though the 30-year is still below 2%, and the 210 spread remains inverted. Dollar is stronger against the yen and euro. Gold is unchanged, and WTI crude is tacking on 70 basis points here this morning. So as we look at the S&P 500, what's interesting to me is that we've now made a higher low above support. I took out the support line so I can show you this small trend line here, right? We still have support in the 2,800 to 2,850 zone that incorporates that 200-day moving average. But notice that the most recent lows have actually been higher. So we're making higher lows above support. That's somewhat constructive. Now, resistance remains in the area between 2,900 and 2,950, and futures are testing the resistance zone here this morning. Near-term strength has not been able to produce an RSI reading above 50. So the RSI remains below 50. We continue to watch that as a sign of momentum. We want to see upside moves in the S&P 500 be joined by momentum breaking back into bullish ranges. So far, we have not seen that. Chaikin money flow is bullish. We've highlighted series of lower highs of late, but it does hold within bullish zones, helped yesterday by a close near the high of the day. So the market continues to trade in this choppy consolidation, call it between 28.50 and 29.30 if we want to get a little bit more precise. So the zones that we've been highlighting still hold, but it is somewhat encouraging to see these higher lows taking place within the consolidation and above support. So just something to keep an eye on, something to watch. I still think we want to be selective when it comes to adding new positions on the long side of the portfolios. Continue to focus on the leading industry groups. We're going to take a look at one here today and continue to focus on the best stocks within those industry groups. Now, our market in a minute. What are we talking about in our note to Chaikin Analytics clients today? Stocks rally, and the S&P 500 has marked a higher low above support. We touched on that. Short-term breadth actually hints that support will hold in the near term. We'll take a look at what I mean by that. And the longer-term metrics remain in a consolidation. Leadership in home construction is likely to continue. That's a group that has been strong, and it could continue to be strong. We'll take a look at why I think that's the case a little bit later in the show. And as we said, futures do point to a higher open here today. Now, as we turn to the major indices from a power bar perspective, still has a bearish tilt to it, right? The Dow added nearly 1% yesterday, but still 8 bears to only 1 bull. S&P 500 adds 0.2%, 101 bears, 67 bulls. NASDAQ, slight underperformer on the day, 18 bulls to 25 bears. Small caps outperformed. Not often that we've been able to say that of late, but they did outperform yesterday, up 1.15%. 391 bears, 324 bulls. Bonds uptick. Energy was the big leader yesterday on a rally in oil, but if we look at the energy sector, still skewed harshly to the bearish side. 19 bearish or very bearish stocks, only 1 bullish or very bullish stock in the energy sector. But it's just something to keep an eye on. Could see some near-term rebound here over the next couple of days. According to the Chaikin Power Bar, small cap stocks and large cap stocks are somewhat bearish. Major markets across the board are mixed. Taking a look at our stock of the day now. Natus Medical, ticker symbol NTUS, closed at $28 yesterday, unchanged. NTUS, Natus Medical, has a very bullish shake and power gauge rating due to very attractive financial metrics, very strong price volume activity, and strong earnings performance. When we take the 20 factors, 5 in each of these 4 categories, we come out with our very bullish rating. Now, we talked about medical devices yesterday and medical products and how that was a leading industry group. And we can see here, Natus is a part of that group. Very bullish stock, strong trend, strong industry group. Stock has been in a downtrend, reversing and now pulling back to hold above a rising long-term trend line. Stock is deeply oversold in the near term. Bullish stock. It's outperforming the intensity of outperformance has been dampening of late. Natus actually looks like a pretty compelling setup to me as long as it holds above the $24 to $26 zone. I realize that's kind of wide, but that's what it is. You can see the consolidation that took shape here between $24 and $26. Stock currently at $28, above a rising long-term trend line. It does skew to the smaller side of the portfolio, so definitely more of a risky trade, but I do like the setup here in Natus Medical NTUS. If you're a little bit more aggressive and you're looking for a name to add in a leading industry group, while being cognizant of the fact that this name is on the smaller side, it's about $1 billion market cap. Natus Medical is a type of name you would want to consider. Take a look at NTUS if you're looking to add some leading small cap exposure. Our sector tracker now, looking at the movement of the major sectors over the last 5 days. And, even with the rally yesterday, still a very defensive feel at the top of the list. We've been talking about staples for a while, and from a relative standpoint, that group continues to improve. Real estate and utilities, we talked about them on Tuesday when we did our sector work. These groups continue to move higher, continue to outperform the broader market. Now, financials are seeing a bit of a rebound here, and that's kind of interesting because rates are still heading lower. Discretionary, comms, and industrials are middle of the road. Healthcare, still trying to find its footing after a steep sell-off a couple of months ago, and then a rebound, and looks to be stabilizing and consolidating. Healthcare, you really have to be selective here. We talked about devices yesterday. They look good. Some of the other areas of the market, those such as pharma and biotech within the healthcare sector, do not look as strong, so selection really becomes important there. Materials still being weighed down despite the strength in precious metals. Technology down a bit, obviously one of the groups levered to trade concerns. Interesting to me, though, that software had a tough day yesterday. That had been market leadership, but that leadership's been waning of late. We're looking for semiconductors to try to pick up the ball and run with it, and energy remains at the bottom of the list. Now, we could see a near-term rally in energy as crude oil rebounds, but the fundamentals and our process still highlights energy as a group that you want to avoid, and that continues to be the case. Energy we've seen energy at the bottom of this list how many times now over the past couple of months. Just a weak sector, and the industry groups within it are weak despite some despite a near-term rally. Now, our industry in focus today, speaking of healthcare, is healthcare services, which over the past 6 months has been an underperformer. But the potential is there for that trend to begin to reverse because the power bar ratio, which measures future potential, is strong. Has 8 bullish stocks, 7 bearish stocks, and the group is currently ranked number 7 of 21 subsectors. Now, it has moved down 3 slots over the past week. And again, when these groups are transitioning or potentially transitioning, stock selection is always important, but it becomes even more important here. It's not a setup yet where you just go out and buy any stock in the group, or you actually buy the group itself, but you really get selective. You start looking at the very bullish and bullish names within the group and look to see if they are setting up based on the process. Triple S Management, GTS, has a very bullish rating. DaVita, DVA, has a very bullish rating, and Select Medical has a very bullish rating. But when I say we're making a transition, here's what I see, right? XHS is the Spider S&P Healthcare Services ETF. Its rating, power gauge rating for the ETF, is neutral, and the trend remains weak. But we've gone from this harsh downtrend into a nice wide consolidation. Notice how intensely it was underperforming back in the March, April, May timeframe, and the intensity of that underperformance has been diminishing of late. That's what I mean when I say we could be seeing a transition. Now, it's kind of too early to call for a change, but if you are looking for exposure to healthcare, you really want to isolate the best names. And this is an area where you can start to go to do some work, but not super aggressive yet. As we said, remains below a declining trend line. Money flow has gone bearish, but the fund is pretty oversold at this point. So it's an interesting group, but it's not one where I would be getting super aggressive just yet. Taking a look at what's trending now, yesterday's S&P 500 gainers and losers are movers and shakers. XEC up 10% on some commentary on a rollback of some methane emissions rules, sent that stock higher. Cody, COTY, up 6% following their earnings announcement. And the rest of the names on the group, Diamondback Energy, FANG, up 4.6%, rallying with oil. Halliburton up nearly 4%, rallying with oil. And National Oil, well, Varco, NOV, up 3.85%. All rallying with crude oil. I will note, though, that FANG and HAL still have bearish Chaikin power gauge ratings. On the loser side of the board, it's really driven by software here in the near term. Autodesk is company specific as well, as their earnings disappointed. Stock down 6.75%. Fortinet down 3.75%. Ansys, ANSS down 3.25%, and Adobe down 2.5%. Market was strong yesterday and software was weak. Could be some rotation out of the software names and into some of the other names that are starting to perk up within the tech space. We had been bullish on that group. If you've been reading my market survival guide, we kind of shifted tone on that a week and a half ago as the group started to lag on a relative basis. RE didn't see any real news to drive that stock lower by 2.5%, but we will note that potentially we'll look for, insurance is still a strong group. So still some work to do within the insurance space, but RE has seen its power gauge rating move to neutral plus. Now let's get into it. On Thursdays, we look at breadth, and short-term breadth is constructive. Here we're looking at the percentage of stocks in the S&P 500 above their 20-day moving average, and that stands at about 43%. However, what's interesting to me is we have a series of lower highs here as the market tests and holds the lower bound of support. That is what I mean when I say that short-term breadth is constructive. That would be known as a positive divergence, and to me, that increases the odds that the S&P 500 is likely to hold this support level in the near term. Remember, this 20-day moving average. It's very short-term breadth metric, but it's a starting point. It really was what started to get us cautious, right? This divergence up here is what started to get us cautious. All right, and then the market's now gone into a consolidation, and we're seeing divergence go the other way to the positive side. So just something to keep an eye on. It increases the odds that support is going to hold in the near term. The advanced decline line is consolidating near the highs, and that's just kind of interesting to me because it still remains above its May-June breakout level despite the market holding below that. Now, the consolidation that we've gone into is in line with the consolidation that we've seen here in the market, but the fact that we're up here near the highs is somewhat intriguing to me. Should this metric, the advanced decline line for the S&P 500, break to new highs, that would increase the odds that the S&P 500 itself will resolve this consolidation to the upside. We're still watching it. Should the gains in the futures market hold here throughout the day, I would expect this indicator to strengthen further, and that could carry positive near-term implications for the broader market. Seasonality remains a headwind for the market, though, as we go into September. You can see that on average over the past 20 years, September has been a down month to the tune of about 1%, and it's only higher 53% of the time. So that's the second lowest metric in terms of percent positive behind January. So just something to keep in mind as the market continues to chop around. We start to see some rallies here. Seasonality is never the absolute reason to do something, but I think it makes sense to have it in the back of your mind, especially as we continue through a seasonally weak period for the market before it starts to improve into the final quarter of the year. September still could be a dicey month for the market. And as we said, home construction continues to lead. And we think that trend could continue. Here's ITB, breaks out of the consolidation and holds support above the consolidation level, above a rising 200-day moving average. The RSI continues to hold in bullish ranges. And notice that during the consolidation, it never became oversold. That is positive momentum confirmation. On a relative basis, the group is trading up here near 52-week relative highs. And if we take a look from a Chaikin perspective, we can see that ITB has a very bullish Chaikin Power Gauge ETF rating. 18 bullish or very bullish stocks, only 6 bearish or very bearish stocks. So the odds are that this trend of outperformance is likely to continue. Not guaranteed, but odds favor that it's going to continue. So the home construction group is an area where we can go looking for ideas. If you like what you're hearing here, help us spread the word. I will be back tomorrow.